Good morning, everyone, and welcome to this Avalara webinar in partnership with the CFO and Accountancy Age. It's entitled The Evolution and Impact of Value-Added Tax. So I don't know if you know, but VAT was first sort of introduced in France. Maybe that's another reason not to like the French as much as we should, in 1954. It is now in over 170 countries, or something similar to VAT, 170 countries worldwide. Out of the, depends how you count countries, but about 200. So it's expanded quite rapidly. In order to celebrate, or I don't know whether celebrate is the right word, of 50 years of VAT in the UK, we're holding this webinar. My name's Andrew Norman. I'm a VAT director at Kirk Rice LLP and your moderator for today. I think they've asked me to moderate the session, as it looks like I've been around for all of those 50 years, but I've actually only been doing it for about half of that time. I started off at HMRC, been working in practice with various firms of accountants, and I was also out in the Middle East when they implemented VAT in the UAE and Saudi Arabia, and then also helped the Oman government introduce VAT a few years later there. So before I introduce the panel, I need to cover some housekeeping rules. Firstly, please do feel free to submit questions throughout the webinar, but we will only be answering those at the end. And hopefully, depending on the number of questions, we may not get to all of them. So I do apologize if we don't get to yours. You can submit the question using the questions box at the bottom right-hand side of your screen. If you do have any technical issues, I'm afraid my technical support is still at school, so I won't be able to help you. But if you submit the same question, if you submit something in that same questions box, then there is a tech specialist on hand to help you. Lastly, the webinar will be available on demand after we finished. Don't worry, all my bad jokes will have been edited out by then. You will receive an email with information on it in the coming days on that. Finally, and additionally, we have some other resources which we're using, and you can access those on the handout tab at the bottom right-hand side of your screen. That wasn't quite finally, because I also have to tell you about polls. There will be some polls during the webinar. They will pop on your screen, so please select and submit your answers. With that in mind, before I actually introduce the members of the panel, we have a quick poll which we'd like you to complete. The question on that is, to what extent do you agree or disagree with the following statement? Business indirect taxes, e.g. something like VAT returns, are too complex and confusing. So if you can put your answers in there, that would be great. While we wait for those answers to be collaborated and collated, I'd like to introduce you to the members of the panel. I'll get them to introduce themselves. So Alex, perhaps you'd like to start.
Thanks, Andrew, and good morning, everyone. Yeah, I'm Alex Ball, Senior Director for Global Indirect Tax at Avalara. If you don't know Avalara, we're a global tax technology company, founded in the US, but today very much a global company, and our EMEA headquarters is based in the UK, in Brighton. My background is I spent around 18 years in VAT and international indirect tax. The last 13 years at Grant Thornton, and prior to that at Deloitte. And my role at Avalara is to advise the business on major VAT changes, both in the UK and around the globe, and increasingly involved now in e-invoicing and digital VAT compliance. And I'm sure we'll be touching on MTD and the kind of future direction a bit later on. But great to be here. Thanks, Andrew.
Okay, thanks, Alex. Matthew, perhaps you'd like to go next.
Thanks, Andrew. Yeah, so I am our VAT and e-invoicing sales director here at Avalara. So I look after a number of different teams within that. But to give you a bit of background on my experience, I've been in finance pretty much my whole career. I've been 11 years in tax and obviously working in tax technology since joining Avalara. My main role at this business is to help businesses transition from the manual way of doing tax and complying with tax to looking to automate and transform their kind of tax technology processes into the future, where we're looking at like VAT returns changing, e-reporting introduced, and e-invoicing introduced. So that's my role here at Avalara. And obviously Alex has given a nice little bio on Avalara itself.
Okay, all right. And finally, but not leastly, Ash, perhaps you'd like to say a few words. I think you're muted, Ash. Ash, sorry, I think you're muted.
Sorry, there was this panel that popped up on my screen as well. And sorry, thank you so much, Andrew.
That's all right.
Yes, I'm called Ash usually. It's easier to pronounce my name. It's Ashwati Chamboli, and I'm the VAT director for Uvri Clock. Just to give you a background on Uvri Clock, it's been established from 1935, so about 90 years of experience in the UK advising clients from multinationals to startups on practical solutions. And we offer a wide range of services: tax, audit, accounting, payroll, legal, and recruitment as well. I have been doing VAT for 16 years, mostly VAT advisory and a bit of reporting. And I have been in the midst of two huge VAT regime overhaul, one in India in 2016 and the other one, just like Andrew, in the GCC in 2018. So yeah, that's a bit about me, and yeah, I'm looking forward to having this discussion. Thank you.
All right, well, I'm sure we're going to have a lot of useful information coming in and good discussion. So let's jump right in and start with the first question. Over the past 50 years, VAT has evolved significantly in the UK. Can you highlight some of the key milestones in its development and discuss how these changes have impacted businesses? Alex, perhaps you'd like to start us off.
Oh, big question. So Andrew, I know in your introduction, you talked about this being introduced by the French. So I kind of think to look at the milestones in the UK, you always need to zoom out first. Let's look at the history of VAT and how and why it was introduced. So it was actually the invention of a German. It was Dr. Wilhelm von Siemens who first had this concept. It was his brainchild. He loved the idea that it was ruthlessly efficient, charge collected by businesses at every single stage of the supply chain. If someone failed to charge at one part in the chain, the tax authority would have got some tax from the previous step. So very, very efficient system. Then first introduced by the French, Maurice Laurie, called it the taxe sur la valeur ajoutée, and that's how we got the term value-added tax on the value added. And then it spread across the European community as it was then, because it was January 1969 when all the member states of the community then first transposed the very first VAT directive into their national legislation. And so when the UK came to join that community, it was a prerequisite requirement. We had to do that. And at the time, Anthony Barber, the Chancellor, he announced that the VAT was a simple tax. I think we all probably have a smile and a laugh at that comment, because 50 years later, the amount of litigation, tribunal cases, just the size of legislation, guidance, all the changes, and actually the size of the VAT industry. It is become an industry just full of specialists, and so many subspecialisms have evolved. So I think that's a really interesting take. If I look at some other kind of key events, one of them's actually just a few years after the introduction, the VAT rate went up from 10% to 15%. So 50% jump. It's apart from a couple of small deviations, the direction has only been one way. We now have a standard rate of 20%, and I kind of think that's important as well. The impact of VAT is suddenly more important for businesses than it was 50 years ago, in terms of margin, in terms of pricing, in terms of looking at kind of natural price points, in terms of cash flow, even genuine cash for businesses that can't recover VAT. And of course, with that change in rate is also the increased impact of getting it wrong. Not just assessments. Maybe there's an inability to charge that VAT at a future date back to the customer, particularly if they're a consumer. But the kind of compounded impact of that rate change with penalties, with interest. And I think that's also led to VAT being taken more seriously. And again, that development of an industry, professionals within VAT.
Yeah. No, I mean, if you look back to the early years of the sort of VAT professions, it was lots of HMRC officers coming out, but it has actually, expanded exponentially. I think that shows how seriously business take it and how complex it gets. And of course, it does raise a lot of tax for the government. We can't forget that. I think isn't it the second largest tax take after corporation tax?
Yeah, that's right. And
Okay.
I think it will increase. And obviously, with HMRC have passed various bits of law over the last years that force non-resident businesses to register in the UK. So there's a much wider net than maybe corporate income tax affects. And I also want to pick up something Ash said earlier on about kind of India and the UAE and the GCC. I think that's also part of the UK's VAT history too, because over the years it's been really UK VAT specialists that have travelled the globe helping implement VAT systems globally. So Australia, the turn of the millennium when they introduced GST, the GCC, Malaysia, and I think that's also then led to the reverse, where we've now seen a lot of global mobility. We've seen international indirect tax specialists, coming over from India, even the GCC, Australia, coming to work in the UK, providing kind of that additional international experience from their own indirect tax regimes, their own experiences. And I think that again has kind of helped our tax system mature. It's led to different perspectives, and really now it's very difficult to just look at UK VAT, but without looking at what's happening overseas. The UK's VAT system has just been so shaped by international trade, by the European Union. 1993, when the single market was created, when the customs borders shut down, when we had intrastat, CC sales lists, acquisitions, dispatches, that was a pivotal change. And then I suppose conversely, that being unwound with Brexit and the new trading relationship.
Okay. Matthew, have you got anything you'd like to add at this point? Just briefly.
Yeah, Alex has talked about the bigger picture stuff. I'd like to go into the deeper detail and how things have affected businesses. So like right through from the invoice. So originally, and I don't think I was around when this was happening, but handwritten invoices.
Okay.
This was a thing. Like, and to see where we've come from now. So we've gone from handwritten invoices to print and posted invoices. Move through now to where we're trying to go paperless into like the PDF and email, and the future is going to be the e-invoice. So it's that progression for businesses and how that's kind of affected businesses. I think the bigger thing that we've seen in the UK so far is the reporting. So again, like I've done this for other countries and not for the UK, but like printed off the return and then posted it to the tax office or faxed it to the tax office. Like I've been part of those things. Because as a millennial, there's a lot of stuff that we've all experienced. Like there's a lot of changes that have happened over the previous years, and now we've kind of moved into online submission, and then obviously with the introduction of MTD, we've moved into like that direct submission. So there's a lot of changes that businesses have had to deal with over those years, and I think more in recent times from a technology perspective on the invoicing and the reporting. And the last piece that is probably not yet happening but will happen is audits. So audits are going to change. Like, gone are the days where the tax man turns up at your door and wants to do a sample check of your data and a sample check of invoices. As we moved to like e-invoicing, e-reporting, that direct submissions, more real-time data, what it's going to mean is that the tax office won't need to turn up at your door. They'll already have assessed the data, and they can just send you an email or a letter to say why they think you are not reporting correctly or why they think certain transactions are wrong. So everything is going to be a lot more real time in the future. Now, we're not quite there yet in the UK, but in other countries, like, they're moving towards that. They're replacing the VAT return with an e-report instead, and so that's the direction of travel. So those are kind of the three key areas where I would say they're affecting the businesses. The last piece is what Alex talked about simple tax. Tax is simple until you start putting loads of layers of rules and stuff. So what we've seen is a bit of a shift in the liability of certain transactions. So from a B2C perspective, we've recently seen a lot of shift from like the marketplaces. They're having to take on the liability of the transactions because the tax office would much rather collect that liability from one individual rather than thousands of smaller individuals. And so we're probably going to see a lot more of that, where the tax office is going to look strategically how they can collect more tax from those non-resident businesses. So that's a few things where I kind of have seen a few changes for directly to businesses.
Yeah, I think yes, you said about handwritten returns, etc. I mean, I can remember when I was at HMRC being taken to the Southend, I think it's Southend-on-Sea facility.
Yeah.
And that's when everybody posted all their VAT returns into HMRC, and there were literally just these banks of people, banks of just typing in the numbers on the VAT return to get them on a system. So yeah, the change is quite significant. I think linking that into returns, obviously I've just got the poll results coming through. So if you remember, the question was, to what extent you agree or disagree with the following statement: business indirect taxes such as VAT returns are too complex and confusing. So 53% of you somewhat agreed with that. 26% strongly agreed. 11% were ambivalent, and 11% disagreed somewhat, but nobody strongly disagreed, which I think perhaps says a lot. So that perhaps leads us a little bit nicely into the second question, which is, as technology continues to advance rapidly, how do you see it shaping the future of VAT collection and administration? Are there any emerging technologies or approaches that are particularly promising in this regard? And I think from a taxpayer's perspective in the UK, MTD is the sort of obvious one. Whether the HMRC are advancing it rapidly with the delays that has been sort of beset with and is still beset with across other taxes can be debatable. Matthew, since you've already picked up slightly on this, perhaps you'd like to continue?
Yeah, so I think it's interesting to what you just said there, as far as what you used to do in the Southend office, like the fact that you used to key in, once the return was sent, that you used to key in that information. I think the first phase of MTD for VAT, they've looked at how they can streamline it on the HMRC side and how they can solve some of the maybe internal stuff they need to sort from that perspective. I think we're definitely going to see a second and maybe third wave of that change of an MTD, because today they're still getting that same 9 boxes. So where we've seen like some of the tax offices around the EU and globally, where they've shifted away from the VAT return and to a more e-report, what they've done is they've asked for more granular data. Now, the UK hasn't done that today. So I would say that MTD, where we are today, is just a preliminary phase to another kind of stepping stone to where we're going to get to. So they're going to be asking for more data, more real time. So some tax offices are using periodical, so they're still sticking to that monthly. But you've got tax offices like Spain who are asking for transactions every 4 days, at least every 4 days. Now, we're going to move to that eventually. When the UK picks up with the other regions, I don't know, but that's the direction of travel I kind of see happening. And with the VAT and the Digital Age proposal, like, we're not part of the EU anymore, so we don't have to abide by it. But I guarantee you that we will be pulled along in that direction and trying to meet that, because the UK companies, we've got so many UK companies with European entities that they're going to need to find a solution anyway, because they're going to have to meet those requirements. So the UK will probably at some point move towards that direction as well. So that's how I kind of see the future of the kind of reporting element. And again, I think I mentioned it in my previous comment about the administration. Like, the move into technology means that internal auditing can become a lot smoother, a lot quicker, and can be done maybe by technology rather than be done by people. So it's less labor intensive. And external audits from the tax office are going to transform, because they're not going to be after the 6 months after, they're going to be more real time, monthly, maybe after the month is closed, or very, very close to when the transactions happen, rather than a long period of time afterwards. So I just see that kind of transition from an administration perspective. And I think, again, on my last comment, I mentioned about the VAT collection. Like, they want to improve VAT collection. So they're going to be looking at, right, can we increase rates? Probably not, given the highest rate is at 20%. They're not going to be able to go too much higher. I know Hungary is at 27%, but I don't think that the consumer is going to be that happy with paying more VAT. So they've got to try and look at how they can reduce that VAT gap. And that is one of the key fundamental things they're going to try and do, is reduce that VAT gap by looking at how they can target the bigger companies rather than the smaller ones that control some of the smaller companies, like marketplaces and platform like economies and stuff like that. All of those things, like the likes of Airbnb and Booking.com and all of those things, where there's smaller businesses that might not necessarily be as compliant as the larger ones. So those are the kind of things around VAT collection.
Okay. Ash, do you want to add some comments at this stage?
Yeah, totally. Because I've worked in India, GCC, and in Europe before getting to UK. This all, whatever Matthew is saying, all resonates so well. In terms of, we are at the stage where the only platform that we're using from a digital perspective, what UK is doing is, kind of restricted to MTD. I mean, we are looking at e-invoicing, the VIDA that's coming up by 2028 in Europe. I think there's a lot of parallels that we can draw in the UK. Considering we have some timeline set up in 2030 and EU has 2028 as their deadline, hopefully there's a lot of kind of parallels that we can draw from EU setup and how it would function. But I think that's the only way, right? I mean, digital reporting and these kind of collection is the only way forward. I mean, we can slow the process, but ultimately that's where it's going to lead. That's what. Yeah.
Okay, Alex. I mean, I know. I think it's one of the big four have developed a database of cases, and you can actually just ask it a question, and it will give you the answer to a VAT liability issue. Do you see that as something coming in? Will that help tax authorities?
Yeah, I mean, it's a good question. I mean, I think everyone's playing around with this kind of open AI at the moment. The Chat GPT, or just today Google's launched its Bard version. So I think that can be used. I think it's going to provide some tools for both the taxpayer and tax authorities. It's interesting. What I was just listening to then, we're talking about MTD, maybe not that ambitious, maybe more of a baby step in terms of technology, because it's really the same 9-box VAT return, still submitted either monthly or quarterly. The only difference really is there's a minimum data set the business needs to maintain. The way that return is submitted is electronically via a JSON file through an API. And there is a requirement for the business to make sure they've got an audit trail on how that VAT return is prepared, no longer copy and pasting on spreadsheets. But if you look at what the rest of Europe's doing, and almost the rest of the world, it's about e-invoicing and it's about live reporting. Ash mentioned VIDA, VAT in the digital age. That is going to accelerate the adoption of e-invoicing across Europe. Yeah, the headline is in 2028, all intra-community supplies will require real-time e-reporting of that transactional data by both the supplier and the customer, and that's going to be underpinned by mandatory e-invoicing. So sharing a document with structured data that can be machine read. So, obviously business process benefits there, but the ability for tax authorities to put more controls on, they can require digital signatures, so you can guarantee the authenticity of the issuer of that invoice or the customer, the integrity of that invoice content. And that also allows business tax authorities to get visibility at the time of transaction. In some countries, they actually have these continuous transaction controls. They will approve the invoice before it physically goes to the customer. Some countries are using things like QR codes to provide that level of accreditation, to give the evidence that the document's been approved.
Which is actually happening in, sorry, Alex, but which is actually happening in a very new market like the Saudi Arabia, and which is fascinating to think that they just came with, we had implementation 2018, and they're already way ahead in implementing this. Sorry, Alex, but
it's a great example, and one of the areas I think is great. So that allows tax authorities to instantly kind of review a document, but it's also providing another resource for tax authorities, because someone like Portugal, a consumer can get their phone out, scan a QR code, they log that to the tax authority, they then get entered into the lottery. They can win a Ferrari kind of thing. So it's not just unpaid tax collectors, the businesses, but you've suddenly got unpaid tax auditors. Everyone can play a role. So I think that's really, really interesting. But it's also that data that tax authorities are going to get. And okay, you've got real-time controls you can do, but also, later down the line, they can run really powerful data analytics. They can run AI. They can use machine learning. And we're starting to see this already in Latin America. And, Brazil implemented e-invoicing over 10 years ago. So, probably over a decade ahead of HMRC in the UK. What the CIAT did last year, so that's a kind of regional body of tax administrations, they got together, they've signed an agreement with Microsoft, they're building a center of excellence for AI, they're building a data center, they're going to share kind of training and resource with each other, and they're going to develop this powerful AI to really interrogate all of that data they've received. They're getting all that visibility into transactions, into a business. So they can spot fraud, they can spot errors, and it means they can really focus their resource on, where the risk is. And they've already done those initial checks. And I think that's really interesting, because that's going to completely change how a tax authority is resourced. Matt said, gone are the days of, the inspector coming out, sitting down, looking at bank statements. In this new world of e-invoicing and live reporting, that's not really needed, because that data is shared already in real time.
Yes, I do agree. I mean, I've seen this, in sort of clients having a message from HMRC saying you've gone over the VAT registration threshold. Why aren't you registered? And the reason HMRC were asking is because they got the data from the card reading till for that. So yeah, it is going on. I think we ought to move on. I think the next question is a little bit slightly different. As the role of CFOs and accountants continues to evolve, what key skills and knowledge should they prioritise to successfully navigate the changing landscape of VAT compliance and management? How can they leverage technologies to stay ahead of these challenges and ensure their organisations remain adaptable? Ash, perhaps you can start us off on that one.
Yes, thanks, Andrew. And Andrew, I think you will be with me on this because we kind of did this in the Middle East when this happened. And the first step over then was to do an impact assessment, VAT impact assessment based on whatever guidelines were available on your supply chain. So I think that's the key step for CFOs and accountants to understand. I mean, I'm sure they all understand the supply chain, but actually deep dive and understand what's happening. Has there been any change? Because at least I felt when I was doing the impact assessments in the GCC that there was a major disconnect with the finance team and the actual procurement team and the business team. And what we did at that point was sit down with all the team members, whether it was business, accounts payable, account receivable teams, finance team, tax team even, to understand what the business does and what's the supply chain. So I think that's a standpoint, that's a good starting point to do this whole exercise, start off the exercise to understand what are the key points on which your VAT applies, understand your supply chain so that you can apply the VAT on those key points. And the other, other point that I would like to look at perhaps is understand what are the solutions that's available, what are the compliance solutions that are available, or look at from your IT impact, or do an IT impact assessment. Once you've done your VAT impact assessments, go into an IT and then figure out how can you streamline this, how can you automate the process. Are there compliance solutions available in the market which is suitable to your business? And that's where Alex and Avalara perhaps could help businesses do that for them. Have these conversations, understand what is suitable, what are the solutions out there. I personally, because I worked in a huge delivery center in Hungary, I understand that a lot of large corporations have already done this. So it might just be easier for them. So perhaps it's time for smaller businesses to also look at this, but it's not to say the larger companies should not take a relook and do this whole set of analysis over and over again. And yeah, I think, did you say how can they leverage technology? I think, yeah. Like I said, I mean, given VIDA is coming in 2028 and perhaps HMRC might do all this implementation in 2030, we're looking at 7 years maximum. We don't have any guidance at the moment as to how it will be implemented, but I think we shouldn't be waiting last minute how we did it in GCC. It was just, in a gap of 5-6 months, we were trying to be ready.
It was 6 weeks from when the regulations were published before they went live. So it wasn't the best. And again, that probably impacted a lot on how much technology could be implemented to help businesses find the solutions. Alex, what are your thoughts?
So, I think with the direction of travel, indirect taxes going, I think skill sets that CFOs, accountants need to start looking at more seriously are kind of data and technology. It's that skill set to be comfortable in reviewing data, running analytics, being able to produce really powerful visualizations, to run exception reports, spot trends, spot risk. And I think that, it's going to be clean, quality, granular data that's going to underpin, compliance in the future. There's certainly third-party technology that can be leveraged. So, for example, a tax engine, that allows you to calculate the right rate of VAT at the point of sale in a consistent manner. So maybe moving away from relying on, an IT department to put through a manual change in an ERP or accounting system every time there's a rate change, try and update, various complex condition tables to try and calculate the right rate of VAT on an invoice coming in or an invoice you're issuing. So we're seeing a lot of businesses adopt a tax engine. We have our Avalara solution, which is global. We have rates maintained by a very large research team. But that's just one less thing for a business to think about. They need to understand their tax policy. They need to own it. They need to focus on the real value add activities. But I kind of think, the tax function is going to want to automate as much as it can, automate a lot of the existing manual processes. So the data, the tax calculation, and then ultimately the preparation of the returns as well. Gone are the days of using Excel spreadsheets. MTD's put an end to that. But the moment you've got clean and accurate data from your ERP, there are now solutions that you can just import that data. You can run tests and checks, and literally a click of a button, the return is produced. That shouldn't be what the majority of the time businesses spend on VAT. It frees up time to spend on more value add. Become a genuine advisor to the business. Be key to all the stakeholders.
Okay, all right. I think that probably takes us quite nicely to a question which I think will be of use to businesses, if you like, more immediate uses. In the light of ongoing global economic uncertainty, how do you think VAT policy should be adjusted to better support businesses and maintain revenue streams for the government? And what role does tax technology play in making these adjustments more efficient and transparent? I mean, obviously, through COVID, we saw a few number of VAT sort of or areas where the government introduced almost emergency VAT legislation to try and help businesses. So, Matthew, what's your thoughts on this?
So, I think some of the things they need, some of the things that the government could look at is reducing some of the barriers to entry. So, like from a non-resident business perspective, like the hoops you have to jump through to get a registration. If someone's wanting to register and give you tax, make that process easier. We've seen that across the world where they've introduced simplified registrations so that businesses that are in like the digital economy can move quicker and get registered quicker and report quicker, because the nature of software is that it's quick, it's easy, you can have taxability potentially anywhere. So reducing some of the barriers to actually getting registered and starting to report. I think Alex spoke about the Portugal QR code and the fact that you can scan it. I think tax offices need to start thinking about how they can creatively do this sort of stuff. So in the US, they have something called SST, so Streamlined Sales Tax, and it's where the actual company gets their compliance for free through these SST providers, because the companies like Avalara do this. They get their money they get their money directly from the government. So businesses get free compliance, so they're encouraged to comply and report the right tax and report the right returns. So reducing those barriers to entry for the smaller businesses and maybe those growing businesses as well, like that's the sort of thing we need to figure out, is how can we put less red tape around stuff so that businesses don't have that that struggle when they're trying to pass the tax office revenue. And the other piece is if the government want to truly look at the VAT gap and stuff like that, they need to move that direction of travel with feeder. So moving towards e-invoicing so that they can reduce and get more data and get more information real time, but actually like focus on how they can get the data from the businesses, help the businesses transform themselves as well. That's how I think would be one of the best policies, to try and work out how they can do something that benefits both the company and the tax office in this instance. So those are some of the examples I would give.
Okay, all right. Alex, any other quick thoughts or comments?
I really like Matt's ideas, actually, and it was just making me thinking. You know, it's not just the tax authority; it's what the government does to support compliance and to support businesses digitalizing, investing in technology. And you know, you look across the globe, there's some great examples of government really trying to incentivize businesses to be compliant. You know, really using the carrot, not the stick. And in Australia, the Australian government are so keen to promote e-invoicing. They said, you know, if a business is dealing with a government department and they raise an invoice electronically, they send it to the department on the Peppal network, they will pay that invoice within 5 working days. You know, so you know, great cash flow for the business. You know, that I think that's great. In Singapore, very similar. The government are actually paying SME businesses around $1 an invoice they issue or receive electronically, because they really want them to make that investment. You know, that they want them to receive the business benefits, and you know, maybe later on there's going to be some tax benefits as a result there. So you know, it can't just be more requirements, you know, more stringent hurdles that businesses need to face. There needs to be some carrots as well. It's not just the stick. It can't just be the fear of penalties and not being compliant. And you know, I think that's where kind of government and HMRC need to actually get together and really have a coherent policy, look at funding, look at incentives, and also, as Matt said, you know, it's not just the domestic businesses, it's all the overseas businesses. For us, you know, that's genuine tax revenue. The majority of it's B2C, so we should make it as easy as possible for an overseas business to register, to be compliant, to actually pay over the taxes they want to.
Okay. Yeah. No, I mean, it's yeah, interesting. I think it's just to sort of remind participants, if you've got any questions, please do ask them, even if they're slightly off subject. I'm sure we'll try our best to cope. So yeah, talking about international trade, etc. Alex, the final question is: with the increasing complexity of international trade and cross-border transactions, how can CFOs and accountants ensure they're staying up to date with the latest VAT regulations in different jurisdictions? What strategies or tools can they employ to minimize compliance, apart from obviously brilliant VAT advisors like ourselves, and optimize tax planning for their organizations? Ash, perhaps you'd like to kick that one off for us.
Yeah, I personally believe that if you could have strategic advisors and partners to help you, because we're talking about cross-border transactions, and each country in the EU has their own rules and regulations to follow, and the rates are different. So if it is a possibility, it would be, you know, wise to have strategic partners and advisors in each country, or at one location, and also have kind of technology-specific partnerships, which I don't know, Alex, if Avalara does that, but you know, if there are changes, it kind of pops up if it's already done for companies. So that could be one way of looking at it. But definitely, CFOs and accountants have to be updated, have to update themselves, attend, you know, seminars like these to be abreast with what developments are happening, what are the changes. So as long as I'm just hopping on the point, but as long as you understand your business and your supply chain, and as long as you keep updated on if you have cross-border transactions and updated on what changes are happening, and you have moved towards a bit of technology on the technology side of it. I think that's how much of a preparation that you should do and anticipate. And I think that's the way forward. And given small businesses may not be able to do all this, perhaps like how large organizations can have one central location to do all these things for you, one central advisor advising you. But then it comes down to how updated are you keeping up with changes. Tax teams and tax professionals will have to keep updated because cross-border transactions not going anywhere. Domestic transactions would be there, but there's a lot of international transactions that's going to follow. That's never going to end. So I think yeah, there's a lot of study and being updated that needs to be done by professionals like us, and there's no getting away from that. I suppose learning is a constant for all of us. Subscribe to newsletters, attend webinars, come to more such webinars, perhaps. But that would be my take on it.
Okay, Alex, your thoughts?
All of the above. I think
that's a cop out.
No, I completely agree. In terms of awareness and knowledge, that's key. And the great thing is nowadays there's so much freely available information. If you go to our website avalara.com, we have a wealth of blogs, on-demand webinars, country guides. We always providing some analysis there. But there's some great webinars, resources, newsletters. The accountants provide too. There's always going to be a place for strategic advice. Going to your trusted advisor, but really that should be very specific. It should be, you've got a problem, you've got an issue, you want clarity on what the position is. I think you almost need a level of knowledge to know that you've got a problem first. So you're using your advisor strategically. I think the original question was on kind of international trade.
Yes.
Post Brexit, one of the big issues is customs as well. It's customs duty. It's VAT in destination countries as well. Nowadays the customs border doesn't necessarily provide protection from having to register and pay tax. We've seen that with using iOS to charge VAT at the point of sale to European consumers. Countries like Australia, New Zealand, Switzerland, Norway, Singapore, regardless who the importer is, you may actually have a requirement to register for VAT GST in those countries just because you've reached a threshold, just because you've been selling low value goods to consumers in those countries. So, it's getting awareness, it's kind of understanding that, it's getting visibility over your revenue. Where are your sales being made to? Let's monitor those, let's put a process in. And then it's leveraging technology to actually make sure you're identifying, where to tax, you're charging VAT, GST, sales tax at the right rate. And then you've got, good quality data from that sale to then do the reporting and pay the right amount. So, we work with a lot of businesses with our Avatar solution. We can calculate VAT, GST, sales tax. We've got some good resources that can help businesses identify if they have nexus in US states. Because there is no federal VAT there, to bring it back to the 50th anniversary of VAT, that there just isn't a federal VAT in the US. It's like the major economy around the world without one. And that's because the tax is at a state and local level. So, UK businesses can be just selling to consumers, businesses in the US. They may not even be the importer of record. They may just be, sticking it in a parcel and sending it over. If they breach a threshold based on the number of transactions or a dollar threshold, there's a requirement to register. And you really need technology to be compliant there, to identify where the sale's taken place, to charge the relevant rate, to help, with the reporting too.
Yeah, no, I think, if the US did ever introduce VAT, there'd be an exodus of VAT advisors from all around the world to the US. They get obviously the best advice possible. I think everyone's looking forward to that day. Just quickly onto the questions. I'm going to run two questions sort of into each other because they're sort of connected. So the first question is that, Matt, perhaps you can have a quick think on this. Is the UK going to implement e-invoicing? And then someone's asked, we do B2C software sales, so how may the new e-invoicing affect us? So Matt, are you okay to go on that one?
So I'll say the first one. So the first one on the UK introducing invoicing, I'm going to steal from Alex here because he mentioned this the other day was something that he heard, that the reason the VIDA proposal actually got pushed through was because of Brexit, because the UK left, and I think the UK was the last kind of person or the last country to not want to push the VIDA proposal through. Once we left for Brexit, it kind of then got like transitioned further through, and so I'm not sure how quickly e-invoicing is going to be introduced in the UK. It will eventually be introduced in the UK. I think it's just how quickly it's on the HMRC's kind of radar to do this. They may look at because they've set up MTD. They may look at e-reporting before they look at e-invoicing, just because it's a natural progression to work that way. So I don't know the exact answer of how long, but I think it's direction of travel, probably e-reporting first, then moving to e-invoicing.
Matt, I just add two points there. So one, the question was, the UK, United Kingdom. It's probably going to be a case of two islands because Great Britain, probably not, slower pace, but Northern Ireland, they are covered by VIDA for intra-community supplies of goods. So, if you're a company in Belfast, or if you're fulfilling goods from Northern Ireland to the EU, you will be required to adopt mandatory e-invoicing for those supplies from the 1st of January 2028. There will be real-time reporting. So maybe we'll see, further adoption, increased adoption in Northern Ireland. And then, for kind of the UK and maybe zooming into Great Britain, the only mandate we have at the moment is for the NHS. So if you're involved in public procurement and you're a vendor to the NHS, and over the last 18 months, it's become mandatory to issue your invoice to the NHS, and in particular NHS England, via an e-invoice, via the PEPL network, or via their e-invoicing platform. So, maybe we'll see, more government departments adopt it, maybe mandate it, but it'll be interesting, when it comes in at a general B2B level.
I think we can't find Andrew, so
Andrew,
great.
Apologies, I lost connection right at that very vital last minute. So
I was going to take up your job.
No, can't have that. Sorry, yes. Do apologies for that. So I assume you've answered the questions that I missed. This great knowledge that you were doing.
We answered the UK invoicing question. What was the second question, Andrew?
I think it was on. Did you answer the bit on B2C software sales and how would the invoicing affect that? Did you cover that bit off?
No, I can quickly cover that off.
If you could.
So typically what we've seen is B2C be more focused around e-reporting rather than e-invoicing. There is obviously in some instances where businesses are having to use QR codes and stuff like that, but predominantly there's been more focus around getting B2B and B2G right before focusing on B2C. There is a few mandates, but they're mainly focused, I think, like Alex, correct me if I'm wrong, the French mandate is looking at B2C reporting. And so what we'll probably more focus on is there'll be more focus on e-reporting for B2C transactions rather than e-invoicing.
Okay, all right. Okay, another quick question here, I hope. What are the potential impacts of changes to VAT rates or regulations on small businesses, and how can they be supported during these transitions? Any volunteers?
I can try. Um, and I think Alex and Matthew did touch upon this in previous questions. This is where the government perhaps could help small businesses, because with digital changes, it's huge for a small business who's trying to overcome the pandemic and start off their small businesses, and to add on to digital reporting, e-invoicing and stuff like that. We saw that transition though for or the leeway given during MTD, and that's something which is something the government could work along with HMRC to provide small businesses and how they can be supported. I don't think there is a way out of it, but perhaps transitional periods and support, in that sense that if they could fund small businesses and help them set it up for them, that would be a way of looking at it. But again, this all, it would impact the small business if that's not taken into consideration by governments and HMRC. So hopefully there's some kind of a support coming from that angle.
Yeah, I mean, I know. Sorry to interject, Matthew. I know when with the sort of change in rates during the COVID issues, HMRC normally when they have a change in rate, they didn't. They put in some preventative measures, so you can't change, backdate or dating like that. They didn't do that with the COVID ones, which I think threw a lot of business. So I think consistency in approach will also help if if you're having changes, because then businesses know we've done this before, we've been through this, we understand how to do that. Sorry Matthew, go on.
All I was going to say, I was just going to back up the point. I think the initial uplift of this change and getting onto these new systems is that's the hardest piece. So working out how businesses can get to that point and helping them along that journey. Once it's in place and it's flowing, like most of the time we don't see many issues. It's that initial change piece and getting them to transform their business into a more technology-based business. That's all I was kind of going to add there.
Okay, all right. Just a very, very quick sort of free VAT advice question coming up here. Is from Philip. My client has just changed from sole trader to limited company. Does he need to register the transfer with HMRC, or can he just carry on with his current VAT number? I think that's a fairly straightforward one. Alex, are you? I don't think it's anything to do with technology, but obviously quite an easy way to end the session.
I have to be quite careful at the moment because I'm no longer an advisor. So
all right, okay.
I will let you field this.
Matt, Ash, I mean, I think what you need to do is my view on this is you need to HMRC you can transfer VAT numbers. You need to make sure that you're happy because there's some implications on that. But yes, you do need to notify HMRC, and I think that's straightforward. Okay, I think, well, thank you all for your thoughts and insights. It's been a very useful session, and obviously there's a lot going on. I think there's going to be a lot more going on. Hopefully, I think for businesses, international businesses, what they really want is sort of some almost international VAT rules, like they've tried to do on telecommunications for place of supply. So we don't have these issues on double taxation or no taxation. I think maybe technology will play a part in that, but obviously simplifying reporting from that initial poll, people do find it very complex, some of the VAT returns. So I think it is going to be a changing area, and I think dinosaurs like me will be out of it because our tech support won't be that available all the time. But I'd just like to say thank you very much to the panel for sharing their insights, and thank you to the audience for the questions. And I hope you enjoyed the webinar, and we look forward to seeing you at future webinars. Thank you very much, everyone. Goodbye.
Thank you.
Thank you.
Bye.